Let's see what we got here in the market, man. Hopefully everyone is okay. Hopefully everyone is happy, healthy. I got some stuff that I would like to share with everyone, as I always do on these sessions. So first and foremost, if you don't know who I am, my name is Sage. I've been trading for a little while. It's been a long time. I'm going to share my thoughts and my ideas about some things that are happening in the market. So if you'd like, if you so choose, you can watch me on Instagram or you can watch me on YouTube. YouTube has you're going to be able to see my charts a little bit better. So let's get started here. Again, good morning, everyone, depending on where you are in the world. And let's get started and talk about the sell-off that we saw yesterday. Right, it was a pretty dramatic sell-off. Today we have conclusive data, and we'll see if some of the levels that I'm going to point out to you guys, if they're going to hold or not. Okay, so off here where you guys are seeing this, you can only see on Instagram. You can't see this on YouTube. So let me just go over this real quick. You're seeing right now the indexes looks like they're starting to move up on 8:30 news. So we have that. We have Google that was pretty weak yesterday. You had Tesla that sold off, that I told all of you, do not chase the Tesla long, right? I said not to do that because you got to wait for it to trade into a more peculiar pocket. And I'll talk about those pockets here. So I'm just looking at the reaction in the market. It looks like NQ and it looks like ES is starting to shoot up. I did swing a long position on NQ. I actually drew a dot right here. I'm not saying this because this is the area, you know, I'm not looking backwards. I actually took this signal with our alpha members. I took a 65-point move. So it was a nice little move. It was a nice $470, whatever it was. So I got that. Let's talk about some levels here on SPY, and let's talk about some levels here on QQQ. I'm going to show you my trading setup on TV, and I'm going to share with you guys off of the 2-hour time frame. That was just a slap in the face, right? It really was a slap in the face. I've been saying this pretty consistently since we jumped out here. I said it for 4 days straight. Be careful chasing that breakout, right? We don't want to do that. We don't ever want to chase a trade after a breakout. In my experience, this is where people that experience emotions and they get irrational about their trading system, this is where they're generally looking to take positions. You don't want to do that. You always want to wait for a strategic point to buy into something and then invalidate that, you know, because I get trades wrong all the time, right? It happens literally all the time. Yesterday, I took 2 losses. I took 5 trades yesterday. I lost 2 and I made almost $3,500. Almost. My swing positions didn't do well yesterday at all. So my $3,500 was completely drowned out by my unrealized losses on my swing trades, right? So swing trades, obviously, we know if I need to cut them, I will. But let's get back here to SPY. Hopefully you guys can see this on Instagram. So on SPY, this is your supply area, right? It was supply area for a minute. Let me draw that out. So you had supply, and there's a concept in trading where if you break out of the supply area, be careful on chasing that long, right? You want to wait till you trade back down into that supply area, which is exactly what we did, which is exactly what I said would happen. And then from there, you can start making, I would say, pretty critical trading decisions. So what would be another level should we start breaking lower here? Another level is going to be the medium. So this is going to be the midpoint. Let me just draw that out real quick, right? So I should have another alert here, right? I'll set this alert as soon as I'm off doing the live sessions today. So at this point in time, I'm going to see if buyers are going to show up again. Now, if I don't get buyers there, then my other support level off of the 2-hour, 4-hour, any time frame, off of the higher time frame structures are going to be as follows. On SPY, it's going to be 567.90-ish, right? This area. I'm going to have approximately 563.50, and then I'm going to have approximately 559.75. Why are these levels important? You don't have to have the same levels. None of us ever have the same levels. This is one of the most important things in trading. No one ever has the same levels, but you have to have somewhat of a zone, right? You have to say, okay, if I'm going to take a risk reward trade, does it make sense really for me to take a trade off of the supply level if my triggers are not firing? I use the moving averages. I use the volume profile, right? I use session volume profile. So you guys are going to see that here in a second. So my session volume profile is telling me that the point of control is 568.85. So if I go on the shorter time frames off the 5-minute, I might be getting some reaction there. Does everyone see that? That session volume profile has the highest node exactly where we are. So we might get a reaction. Am I going to take a trade long or short just based off of that volume node? No, of course not. I'm going to use the moving averages, which right now I'm getting a fan out here to the upside. And then I might be firing a little bit of a squeeze here on the 5-minute time frame. So there's several factors that I use to determine whether I do want to take a long or a short. So as far as I'm concerned, if we start to take out some of these lows, this area right here, right? If we start to take that out, I'm not interested in longs. I am very interested in longs overall. I don't want to be shorting the market. If you took shorts yesterday, fantastic. I took 2 shorts, but it wasn't enough to hold me for my swing positions. So as far as I'm concerned, again, off of the 30-minute time frame, you have this designated zone, and then I think you have a high probability trade back down to this area, and then back down to this area, 559.60. Cool. At that point in time, just like I did here, I swung long positions. I caught this entire rally to the upside, not because I'm better than anyone else. No, it has nothing to do with that. It has everything to do with thinking about things in a probabilistic sense. I put on my risk reward calculator. I had my stop loss because I was trading futures. So if we started breaking lower, that's fine. I'll take the stop loss. You guys, some of you guys in the group have been seeing exactly how much of a loss I take. Sometimes on my micro trades, I'm taking a $13 loss, $14 loss, $16 loss, $25 loss. You can afford that if you're taking several contracts. Now, what my gain sometimes is 100, 120, 150, 200. Yesterday, I had $350 trade versus the $20, $30, $40 losses that I was taking. Cool? All right, so as I'm talking here, it looks like we are getting a reaction off of this zone. This zone is not something that I'm bringing up just because price action is reacting here. This zone I talked about for the last 2-3 days. Wait always. This is just a little bit of knowledge that I would like to impart. Always wait after the breakout to trade back into that supply area and wait for that to act as support. Why? Because buyers were skeptical around that supply area. Let me remove the session volume profile just for a second so you guys can see this a little bit cleaner on both platforms, on Instagram and on YouTube. You always want to wait for either that to hold or where that start of the rally, right? Because that's a gap fill concept. Y'all should be, using those concepts because they're mean reverting concepts. So if you revert back to wherever you rallied, that's usually a sign that, okay, buyers were not that enthusiastic. You had a lot of short-term traders. And I've said this for a couple of days. The rally was low volume. It really was. Yesterday, the sell-off was pretty nominal volume. So I don't really know what that means. I don't know if the market overall is looking for lower levels. I have no idea if it is. But as far as what I can see for this point in time, it might change in the next 5 minutes. But at this point in time, there is a low that's been put in at 550. There is a higher low at 559. And there is yet another higher low that's being put in right here. So before we lose our shit, right? Before we say, okay, now we're in a bear or a bull market, I usually hate talking about those kinds of things. I like talking about percentages and probability. I really hate talking in terms of sentiment or emotion because it's not helpful. It's not helpful for me to say, this is my opinion. I know that this is going to go here. This is absolutely going to happen. That doesn't help anyone. It really doesn't help anyone. What is helpful is if I'm going to take a fib, I'm going to put the fib here, and then I'm going to mathematically calculate. Look at some of the levels that I drew out here, right? Those points are almost, I do this intuitively. I don't even use fibs well, I do use fibs when I'm doing my lessons. But intuitively speaking, check out where my levels are, man. It's not that hard. I've been doing this a long time. If you intuitively know, okay, so these are some of the support levels, and these are some of the sequences of where we can trade for fibs. I just plotted it on there. It's kind of amazing that I got that almost perfectly right. So just look at some of those levels. Pay attention to those things and mathematical concepts. Be a little bit more analytical, right? So analytical levels. Never mind opinion. I don't want you guys to listen to my opinion because my opinion doesn't mean shit. All that matters is concepts. If we're trading into some of these pockets, how are we going to react in those pockets? And how do you fire a trigger? How do you know that you want to take a long or a short position? I talk about this all the time in the Alpha program. I literally do this 6 hours a day in the Alpha program. It's all about, are the moving averages firing in your direction? Do you have an oscillator that's telling you, okay, now we're starting to build up momentum to the upside or to the downside? And then I use the CVD to determine exactly how much volume is bullish or bearish. Do you see how that's a lot different than me saying, hey, I know we're going to be trading here, or I think it's a bull market, or I think it's a bear market? No one cares. No one cares about my opinion. But what is important is thinking, if I do take a trade, where am I going to say trade is off, risk is off? Risk is off if I'm going to take a long position if I start breaking below that level. And then I'm going to try again. If I do want to have a bias, I'm probably going to try again at some of those levels that I outlined. Cool? Let's talk about QQQ now. Let's see exactly where we can find some of those analytical levels. Most of you know that I use something called the voodoo lines. It looks like I was already doing this example on QQQ. I was doing a lesson last night with a member, and I was talking to that person about Fibonacci's. So why do I have that zone right there with my little rant off of just imparting levels? I'm going to use that as my area of resistance or my supply area, right? It was a previous supply area. Why am I going to use that as a point of reference? Because it might now turn into a demand or a support area. So if we get back down here on Qs and hold that, that's a pretty good area or a launching pad for you to take a long position. Now, are you going to take a long and then hold for a stop loss all the way back down here? No, probably you're not going to do that. Let's check out the shorter time frame. Let's see what's going on here. Okay. So we're coming into this point. Are we going to hit it exactly? No, of course we're not going to hit it exactly, but we're coming into that territory. So how would I feasibly consider mapping out this trade? A lot of you guys don't do this. A lot of you guys are coming to the computer and you're just saying, let's see how it goes. I plan these trades out. I literally do. Every single trade. I plan about 3 to 5 trades every single day. So I'm going to take my risk reward calculator. I'm going to put it on here. If I'm going to take a long position, I'm more than likely going to invalidate the position at $482.45. My target is going to be at least a 2-to-1. So in this scenario, it's a lot more than that. And then I'm going to fire on the trade. Should I be firing on the squeeze or the EMAs? I don't have that quite yet. If we start breaking lower, I'm looking at here, and then let's check out the higher time frames, the 2-hour time frame. I'm going to use my voodoo lines here. I'm not going to use my Fibonacci tool. So let's just check out and see what the voodoo lines say. So voodoo lines already do this job for me, right? They're based off of the Elliott wave theory and also Fibonacci sequence. So I have support right where we are. I have support at $481.75, and then I also have support at $480. So the fire line brings us all the way down to $472. Let me just preface this. Let me spend 10 seconds on this. What you're looking at on my chart, the voodoo lines, all they are is just a hierarchy structure of what support and resistance levels can be, okay? Just in case you've never heard of the voodoo lines, because there's always new people coming to the session and some people have never heard of them. So is it another tool? Is it another analysis tool? I don't like using tools just for the sake of using tools to look smart. I think that that's ridiculous. For me, I like using tools that I understand why it is that I'm using it. If I'm going to use a hammer, am I going to use a 14-ounce hammer, a 16-ounce hammer, or a sledgehammer? I want to know exactly what the job is and what tool I'm going to allocate for, and that's why I use the voodoo lines per se, right? The voodoo lines tell me, give me a sense, what might be the overall structure in the market on a horizontal plane. It's not drawing trend lines. It's not doing anything like that. I only look at price action on a horizontal plane. I don't do the trend line stuff. For me, I haven't found success with it, and the probabilities and not the win rate, but the statistics behind it are not as good as horizontal planes. You have a little bit more accuracy here. So let me digress. Back down to roughly around $477. Maybe I might look for a long position, but I'm really interested back down to 472. I've stated that level a couple times. Also notice where we are on the squeeze. If you're looking at the 2-hour time frame, my squeeze is not really firing up. Let's check out the 4-hour time frame. Yeah, the 4-hour time frame, the squeeze is firing down. This is what the squeeze is, right? All of you, I've done many webinars. I've done over 30 webinars talking about the TTM squeeze. So if you guys are so interested, just go into your indicators tab and type in TTM squeeze. You guys can get it for free. There's one by Beardy Fred. It's very good. It's identical to the one that I have here. So far on the 4-hour time frame, I don't have that squeeze to the upside. You're not going to get an entry for a long or a short position off of the 4-hour. Obviously, we all know that, right? But 15-minute time frame, let's see what we got, right? I don't really see it. What I do see is that concept that I just was talking about us trading back down into this supply area and then possibly holding it. If we start breaking a little bit lower, then I'm looking for the next possible zone of support. What is that going to be? I'm going to say it one more time. Around there, okay? Around that area where the fire line is and where the snow line is, between 472 to 475, I like those areas very much. Cool? So I just went over two stocks, or two ETFs, I should say. I'm going to go over just two more, and today I would like to actually give you guys more of an opportunity for you to ask us questions about our trading style. We had a webinar, wonderful webinar yesterday, that was delving into risk reward on an extreme scale by Shane. Shane is one of our analysts here. So that webinar should not have been missed. That was an exceptional webinar. But again, I want to give you guys some time just in case you have any questions to ask us. So let me go over two more stocks that I'm particularly interested in. I'm going to go over coin. I'm very interested in coin. Extremely, extremely interested. On the 4-hour time frame, I'm looking for support approximately at $180. I already hit my $190 target. The last time that I was on for you guys, I said that it was going to hit 190. It hit 190. So we're 3 points above my target. We break below that shelf level. I want this at 160, if you can believe that, okay? 160, I think we have a bargain. So that is just another leg lower. Do I think the indexes are going to create another leg lower? This is just opinion, right? I have to be clear about this. I have to say, this is my opinion, and this is what I'm thinking about it from a mathematical standpoint. So in my opinion, I think coin trades back down to 160 and possibly back down to 120. Just opinion. Cool. If it does, I think we have a banger of a trade. You get, I think per year, you get anywhere between 7 to 10 absolutely, $1 million trades. I think that this is going to be one of them. Cool. So that's coin. Just watch out for those levels. 160, I'm interested. I'm not that interested at 190. I might do a short-term trading opportunity, right? I might do shares, but honestly, I'm thinking more about doing calls. But as far as I'm concerned, I think I want to do a bigger trade back down to 160. Let's talk about Tesla, right? Because that's what most traders are going to be caring about for now, right? I said be very careful with chasing the dragon's tail. Don't ever trace a breakout. If you get back down to $250, that's the area for me. What if Tesla starts breaking here to the upside and goes up to 360? Then the trade is not for me. I can recognize that, right? If you're the kind of person that has to be in every single move or has to catch the move from the bottom all the way to the top, that's okay. I'm not the trader for you. I don't signal those kinds of trades. I signal trades before the breakout. This is common for me. I catch so many of these trades. I literally did signal Tesla here at $222. I just got stopped out. So it is what it is. So at 250 or lower, be mindful too that earnings is around the corner. Earnings doesn't look like it's going to be spectacular for them, right? My opinion, just my opinion. Off of the daily time frame, I'm still seeing a lot of buildup on short interest. I don't like seeing that, especially when we're rallying into something. That is not a recipe for something that I want to buy into. It's not something that I want to hold calls into. It's not something that I want to do a put credit spread on. I don't want to do anything with Tesla. I just want to wait for it either to trade back down to 250 or lower. And then I have some pretty aggressive targets to the downside. My target would be about 190, 195. So I'm going to draw a zone there. Let's do that. So there's my zone. And then I have another target at approximately 175. Why am I even bringing up those levels? Why should you even care? I always bring this up because I never know, if we have new traders or if we have new people that are following along. There was 2 instances where I caught Tesla long. I caught Tesla long when we were starting to move up here. So I caught that long. And then I also caught this long right here. I did take this trade at approximately 165, but not on the left side of the V. I took it on the right side of the V, literally the right side of the V. So as soon as we started recovering here, I was interested in the trade. Obviously, I had my invalidation area, and I caught Tesla from here all the way up to, not the top, not the pinnacle. I didn't do that. I caught it at roughly where that node is, about $245, $247. I want to do that again, okay? I would love to do that again. All in all, that's it. I do want to just look at the VIX real quick, and then I'll give you guys the floor. Yeah, the VIX was annoying. This really pissed me off yesterday. The move that we had on the market selling off yesterday pissed me off. It was I don't even want to comment on it because I'm going to be cursing throughout these live sessions, which I don't want to do. Yeah, that VIX got low, man. It was tough. Yesterday was a punch to the gut for sure. But as far as where we are with structure on SPY and Qs, I specifically want to just talk about SPY and Qs. We haven't broken structure lower. We haven't. So some of you might say, Sage, you're an idiot, man. That is a bear flag, 100%. Yeah, it's a bear flag for sure. Does that necessarily mean that we're going to make another leg lower? We have to wait and see. Am I going to be signaling short positions all over the place? No, probably I'm not going to do that. I would signal a short position if we started breaking below 555. I don't think that this is an area that we are necessarily looking for shorting the market overall. Again, want to make sure that I distinguish this. That is just my opinion, just literally my opinion. I don't like shorting when we are on the 200-day moving average. I don't think that that's smart. I think that around the 200-day moving average, it's the only indicator that some of the institutional traders or some of the people that actually move the market, generally they're looking at that as their baseline. So if you're at the 200-day, historically speaking, off of the weekly time frame, just check out how many times we hit the 200-day moving average, right? How many times have we done that in the last 15 years? We hit that once, twice, 3, 4, 5, 6, 7 times off the weekly. We're not even close to that here, right? We can sell off another 100 points. I get that. I truly get that point. Off of the daily time frame, sort of the same thing, right? We hang low on the 200-day moving average, and generally that's where we start to recover if you give it enough time. I want to give it enough time. Qs is the same thing. So basically what I'm saying is I don't like to short when we're close to the 200-day moving average. I don't like the win rate. I don't like the win rate at all behind doing such things. Qs is the same thing. If you start to bottom out close to 472, which I mentioned when I just jumped on, then I'm looking for a target back down to 450, 455. Cool? All right, everyone. Does anyone have any questions for me? Does anyone want to ask me anything about any stocks? I'd be more than glad to answer. Now, while you guys are doing that, we do have a new newsletter that will be coming out that actually we write. That newsletter, if you are interested, it is completely up to you, but click the link in our bio. You can sign up to the newsletter and you can get analysis that's a little bit more concise than what I go over through on these live sessions. So just click the link in the bio, and then you guys will have access to exactly that. Cool? So yeah, that's it. Let's see what else we have. Let's go over. This one is a good one. I'm in Meta currently. All right, so Meta broke below the corridor. We're right on the 200-day moving average. I'm going to use something called the volume profile. The volume profile tells us where there's the largest amount of exchange between buyers and sellers, given a time period. So let's go. I think that that's a good anchor. Cool. So the peak of that node is $590. That is where I would look for support going forward. There was a huge amount of exchange, and this coincides very well with the 200-day moving average. I personally am very bullish on Meta. I have a position on Meta. I took several thousand shares, actually. Yeah, it was quite a few. So as long as we hold above $585, I'm still in the trade because my cost basis on it was very good. I got in at a very good price. I got in before this breakout. So if I can get back to cost basis, if I take a 2-3% loss, I'm okay with that. What would be the next leg lower? In my opinion, the next leg lower would put us at 555 on Meta. So between 555 to approximately 560 would be my recommendation for you to watch and then look to make a critical decision based off of what the order flow is saying, what the market is saying. There's earnings for Meta here very shortly, which earnings expectations has actually been revised lower, which is something that I like, especially on something that's been selling off. So that means that the gap for extrinsic and intrinsic value, that gap is slowly starting to come into agreement, right? Because most of the market is overpriced. Anywhere you look at it, there's nothing in the market that is fair value. But the closer you get to that fair value, the better I think the pricing is for any particular stock. So Meta is there, and Google, obviously, for me, is there as well. Apple, more or less. So I'm going to say Meta, I think it's chef's kiss. I think it's one of the things that you should be looking to put into your portfolio. If you're looking at another leg lower, I would probably say between $490 to $500. I would always, even in my videos, I'm always going to tell you, have more than one support or one demand level. Don't ever trade thinking that your demand level, just because you drew it out on your chart, that the market is going to respect that level. Do not do that. That is a novice thing to do. Always consider, if I'm wrong, how low can I feasibly see exactly where we can go? Those are the levels that I have for right now. Someone asked about Nike. I wouldn't touch Nike. If someone gave me 10,000 shares of Nike, I wouldn't want it. I don't even want it gifted. I don't want it for free. I've been waiting on Nike at $65 for 2 years. I don't even want it now. In my opinion, Nike is on a trajectory to about $50 to $55. So I have to look at the fundamentals. I'll be honest. I haven't looked at their K filings. I haven't looked at their schedules. I haven't looked at anything like that. I like actually looking at the numbers. I don't like just reading an article and someone has an opinion that Nike is going to. I don't like doing that. I like to look at filings and I like to see patterns. So here I use an indicator where it shows, all right, we did this well for quarter 1, quarter 2, quarter 3, quarter 4, so on and so forth. So it's all over the place here on Nike. I don't like it in terms of an investment. I don't like it in terms of trading. I think that the market is no longer sweet on Nike. I think it's going to be at a value point closer to $50, $55. So that's another $10, $15 move here to the downside. Okay. So that would be my opinion there. Microsoft. A lot of you, I like to study history on charts. Microsoft for almost 10 to 12 years before this giant move here to the upside. For 10 to 12 years, Microsoft basically didn't do anything. This is the period that I'm talking about. So you had just, I want to drive this point across, and I'm going to explain to you why I'm not that interested. So in a period of almost 7 years, it doubled, okay? Not that interesting here. What am I looking at for Microsoft for me to decide whether I want to take a position? I've said already a couple times in the Discord, I didn't want to pick anything up on Microsoft because if you look at here, where you have your support and where you have, let's call this a daily range. You have a range. Let's look at the calculation. What is that? You have about a 20% range. I'm not that, as a trader and as someone that likes volatility in the markets, this is not that interesting to me. 20%, I can't do much about that. So in my opinion, for Microsoft, despite the fact that they are at the forefront, they're literally at the forefront of quantum technology. They're investing a lot in new infrastructure. I understand all that, but I don't really see exactly where or how high it is that we can take Microsoft if we don't have room. I don't foreseeably see any room, and I don't see any historical price action that would substantiate me taking a position and gaining 20, 30, 40, 50, 60%. So as far as where I'm at as a trader, as someone that thinks about things from a percentage standpoint, I would look for Microsoft at approximately $320, which is an extremely aggressive target to the downside. I get that. But you're probably not going to like my next level. My next level would put us at approximately $250. At those points, then I think that the juice is worth the squeeze, so to speak. So there are other trades in the market that have so much more bearings and so much more going for them as opposed to something as established as Microsoft. I think that Apple would actually be a better candidate. I think that Nvidia is a better candidate. I think that Coin is a better candidate. So for those reasons, not that I'm saying, Microsoft is not a great company. It's a great company, but I don't see exactly how much further we can go here. I can't sit here and say, all right, Microsoft is going to be doubling in the next 2.5 years. I can't see how the numbers are going to substantiate that. So for those reasons, I'm going to say that Microsoft, not interesting stock for me at this time. All right, what else, guys? Okay, so someone is still in on. I signaled on a while ago. Yeah, I said that on was going to hit $70. It got close. We're $5 away from that. I think that this is a better company to invest into. Nike is a dinosaur. Someone asked me about UPS yesterday. I think it was Liam. So what I said to Liam is, instead of buying into a logistics company that's been around forever, logistics has not revolutionized anything in the market for how long when was the industrial age, right? In the 1840s all the way up to the 1870s. So in the industrial age, so we've been in the logistics market forever, right? Because we had Pony Express, we delivered things and spices through camels, all that stuff, cool. But in terms of market-wise, logistics doesn't really look like it will be revolutionized anytime soon, unless we have teleportation or something that's revolutionary. I wouldn't want to invest in technology that I can't foresee. In my opinion, you all should be investing in things that are coming of age or things that are being built or being invested into. What is being invested into now? Cybersecurity. Cybersecurity is huge because if we are advancing in technology, you have to have security in order to protect that technology. That just makes sense. So cybersecurity, cloud, right? I've been talking about cloud for a year and a half. I've invested in cloud and holy crap, man, it's been wonderful for the last 2 years. Great. So there's that. Next thing that I would probably recommend is you look into something quantum based. If you want a quantum stock opinion or if you want a recommendation, I'm going to tell you to buy the ETF. I bought this at $44. Why did I buy it at $44? Because I walk the talk. If I'm telling you, hey, I think that this is a good investment for XYZ reason, I'm going to give you the reasons and then I'm going to tell you, look at the ETF. Had I bought this a little bit earlier, back in 2018, right, or back when COVID was most apparent, I did buy it at a good price. Honestly, yeah, my price was pretty good. But I wish I bought into this at $26. If I knew what I know now, maybe I would have. And then, if you want to invest in anything that's generative AI, which I think that that's the way of the world right now, I think that is still something that is relatively new and can still be advanced more so than logistics. I'm going to recommend the chat ETF. Of course, I'm going to recommend this. I bought into this. I'm pretty much at my cost basis, but I see this at no less than $90, $100 in the next 5 years. Why am I talking about, something 5 years down the road? Don't just pay attention to that, but pay attention to how I'm thinking. I'm not thinking about technology that we're not really looking to advance that much. I'm looking for things that will propagate a stock up, right? Because that's what a stock market is all about. It's about investing in things that have the propensity of still growing overall. So that's why I made those comments on Microsoft. Can Microsoft grow another 150% from here? Yeah, of course. I mean, it definitely can, but it's going to be a while, right? So look into some of these new technologies, look into cybersecurity, check out some of those cybersecurity stocks, check out some of those quantum stocks, those generative AI stocks, and then make sure you still apply risk reward, but you understand, okay, this is the way of the world. This is the way where technology is going. And look into some of the bigger companies, what they're investing into. They're investing into these things, and those are where I want to be allocated. Cool. So that's my reasoning. That's my reasoning for some of the stuff that I recommend. What else we have, everyone? Lucid. Okay, let's check out Lucid. There's a good risk reward trade here. For sure there is. So let me look on the 1 hour time frame. I would look at Lucid close to $2. So I would wait for another 30-cent drop. This is my risk reward trade. So obviously I'm looking to get into Lucid as well. So I would wait for about $2.10, holding around that area, and then I would look to go long. I would not look to go long here because you have another possible maybe 25 to 30 cent drop before you really get in at a good price. Where would you invalidate the trade? In my opinion, you would invalidate the trade at approximately $1.85. So you're risking maybe 15, 20 cents to make whatever that can be. The risk reward here would be unbelievable. I would 100% take this trade if it gets back down to that level. So I would invalidate that maybe there. And then my risk reward would be all the way back up there. 7 to 1, 10 to 1. I mean, it would be a banger trade for sure. I'm not that interested in Netflix, to be perfectly honest. I would be interested in Netflix at 760. I don't know how much gas we have in the tank in order for us to take it. Just like my comments there on Microsoft. I'm looking at about a 9 to 10% move. It's a slow moving stock. So for calls, this is not going to be your trade, your home run. I would prefer that you focus on Tesla or Coin because it has more erratic price action. So on Netflix, I'm going to say no. I would say you would wait for 850. I think that that's reasonable ask. And then all the way back down to 760, 775 in order for you to trade a very good risk reward trade. All right, what else do we have, ladies and gentlemen? Okay, from an options perspective. I have to check out and see how much the options are trading for. Yeah, I have to do a little bit more of a deeper dive into Nike. I don't know what the implied volatility is. I'm looking at it right now on my phone. So the implied volatility is not that bad. It's between 32 to 47%. You know what? When Nike starts to turn the corner, because it will, of course it will. I'm not opposed to the idea into buying leaps on Nike, but overall, I would still say more downside. But I don't have a strong opinion on Nike or Microsoft either way for options. The options on Microsoft make more sense because the implied volatility is so contracted. So it would make sense, but you also have to foresee some explosive movement on Microsoft. I don't think that that's necessarily there. The implied volatility on Microsoft is not that good. It's less than 25% on a good day, so it's relatively low. So I don't know. I would have to dive a little bit deeper. Just looking at price action, I can give you a pretty quick opinion on that. But on Microsoft, I think that I would prefer to wait on the levels. I think a lot of the move here on Nike has already happened. And let me look at Microsoft. Yeah, Microsoft is it's just so dry, dude. It really, really is so dry. It doesn't move throughout the day. All right, let me see what else. Okay, so that's all I have for today. If you guys have not been watching our YouTube stuff, I've been now making more YouTube videos that are more practical. So there was one, it's an hour long, believe me when I tell you. An hour, 2 hours, 3 hours spent on you educating yourself and reviewing your trades every single day, which I do. I've been doing this, I've been doing exactly that for like 12 years now, every single day, including the weekends. I'm reviewing and I'm reverse engineering what's going on, not only in my trading system, but also what's going on in the market. Good habit to pick up. It really, really is a good habit to pick up. So I'm going to be talking more about that in the YouTube videos. If you are interested in watching that kind of content, not content where I'm sharing, how much money I have or like where I'm spending my money or me going out to parties. And first of all, I don't do that. I'm old, right? I like reading. That's my thing. Like I enjoy reading. And that's where I spend the majority of my money, and my wife gets angry every time. Spend $3,000 on books every 3-4 months. But anyway, if you're interested in that kind of content where we actually dive deep into a trading system and a methodology, then I would recommend that you jump onto the YouTube channel. So there was a new video that was posted out that we're talking about technical analysis. Obviously, there's going to be more, but if you are interested in that type of content, just subscribe to the YouTube channel. Cool? It's going to be there. Also, remember that we do have a newsletter that if you are interested in getting information a little bit more concise, where you can spend maybe about 2 minutes reading into what it is that we're looking at in the market, please feel free to sign up to the newsletter as well. Cool. All right. That's all I have here for today, guys. I have to jump on here and see what the market is going to bring for today, but I appreciate you guys spending time with me, and I'll see you guys here for the next session. Take care, everyone. Bye-bye, guys.